Traders, welcome to Trading Television, the exclusive, exciting new place for active day traders and swing traders. It's fast-paced, it's professional, and it's easy to use. From Wall Street to your bank account, there's never been an easier way to unlock today's top trading secrets. Let me introduce your host, Ken Calhoun.
Hi traders, and welcome to Trading Television. Here's yet another trading strategy I'm really excited to be sharing with you today. Here's a quick overview of exactly how it works. Hello active traders, and welcome to a nice rally day walkthrough here on October 5th, 2010. This is Ken Calhoun, president of daytradinguniversity.com, a real trader who shows you how it's done. Let's take a look here. I'm in 60 shares of LVS in an overnight swing trade from earlier, position I've built up, currently in the money by just 125 bucks, which is nice. I'm going to tighten in though a trailing stop on this to illustrate for you how to exit winning trades correctly. You want to scale out of 2/3 of the position, whatever that is. So in here I'm using 40 shares that I'm going to get out if this gets to 37.14. Now if we look at the 1 minute advanced candle chart here, you can see that's the reason why. If we get right under 37.14, I'm using that as support and the stop out for an open winning trade. Okay, and I'm letting the remaining 20 shares ride to just over break even. And I've got it, well, 36.25, so right under previous day's low. So I tighten that in a bit. Now I'm going to add to this, and again, the market's live here. I have no idea which way this is going to break. I'm going to add 40 shares though if it gets up to 37.48. So I'm going to scale into this. And another good example here is we double down one more time, because at that time the position will be 100 in the money, 100 shares that are in the money shares, and so I'm going to use 37.68 to scale in yet another time. So that's the rack, or that's the trading setup for this. How to manage an exit. So if this thing sells off, I'll get out of most of it here at 37.14, which you can see is about 10 cents under the inside market. If we continue on up, I will scale into it if it gets over 37.48, and then again over 37.68. Got it? All right, now let's take a look at some of the hot charts in today's markets, because I want to give you a heads up. If you remember from the last week ahead video I posted just over a week ago, I had mentioned both Amazon and Baidu as being favorites. So let's start off by looking at those. The technique I want you to learn is scan for 55-day high breakouts and give preference to scaling in on those in addition to 2-day high continuation plays. So you can see, for example, Amazon here today has my classic small gap up, continued to a 2-day high breakout pattern. Right now this is good, however, because it's at or near previous resistance up here in the low 160s, I'm not going to scale into this on any size unless we get over, say, the 162 or so. Right, so I'm going to be a little more cautious on this. Let's take a look at some other ones in today's action that have moved. Reason for this is I want to give you some examples of the types of stocks and ETFs coming up in just a minute that are best worth trading, or at least learning from in your own trades. Let's take a look here at, for example, HLG Harley. What I like about this chart is always look for these bullish cups. This is a runaway gap continuation today, which is great on high volume. But see how this bullish cup pattern looks like a large U? And again, it's a 55-day chart and a 55-day 60-minute candle chart, and we like to see breakouts outside of that range, especially, at least I do. That's how I trade. So again, 2-day chart for momentum intraday breakout day traders, 55-day chart confirmation for the swing traders. So I'll be looking at scaling into this if it takes out new highs, say, and again, these are not trade recommendations. Don't make actual trades based on this, because again, many of these will make minor false breakouts and chop back down into the range. Then I'll re-enter on subsequent triggers, but around 32.6 on Harley. It's a reason why on this actual real trade, for example, I am tightening in the trailing stop on 2/3 of the shares of that to 37.14 in case it drops back down, because this is a weaker pattern than, for example, let's say Baidu, right? Really good example. Number one rule for active intraday trades, avoid trading inside previous day's high-low range. Wait for it to get at least 3/8 of a point, 0.38 or so above. For this one, maybe half a stick, half a point over previous day's high, right? So this is a bullish cup breakout continuation. Really nice play, moved up 2 points. Again, however, because when I pull up the 55-day chart, I see that Baidu will be reaching previous resistance up here just over the 105, 106. I'm not going to put on any size until it breaks clear of this upper shadow, this candle, right? Which would put it around 106, 107, right? So I want to be cautious. Still a nice breakout play. You know, if you're trading size, just scalp into it on breakouts over previous day's high. But for swing trades, we want to see a 55-day high confirmation as well. Couple more stocks and we'll move to ETFs. I like this one, STEC. For a cheap stock, it's doing well, right? It's moved up nicely. One of the things that, again, though, on 55-day, always be on the lookout for what should be previous resistance. In this case, you can see 13.5 is resistance. So even though this looks really nice from an intraday breakout standpoint, let's say, as for example, I just came across this one going through my leaderboard scans. So I don't believe I'm in this one. I'm not going to get into it though until it breaks well over 13.5, say 13.58, 13.68. I'm going to be a skeptic of it because it had this big high volume, probably a news related spike, right? Sellers brought it back down. It's starting to come back to life. We'll see if it breaks out to new highs. The first place that I would scale in on any size wouldn't be until it breaks that resistance. Another one here, PXD. This is a great chart for intraday trading. Same exact pattern. We look at the previous day, go 35, 40 cents above previous day's high. On these that are over, say, 50, 60 bucks a share, you can roll that up to 50 cents or 55 cents or so. But anyway, you can see this is a nice multi-point run, right? 3 points up in PXD in today's price action. What we look for, as always, are these cut patterns for breakouts. See, and I always count the shadow too. So in this case, 68 was R2. Our resistance 1 was 62, resistance 2, 68, resistance 3. Now I'm going to use 70, right? So I'm going to get into this thing if it gets over, say, 70.5, 70.6. All right, now let's quickly flip over to our ETFs. I only have a couple of minutes here left. Our long ETFs obviously doing very well. Our Qs up here, I'm going to use 50 as resistance. As I'd mentioned in the previous week's video, I'm going to look for longs potentially over, say, 50.3 or so, 50.2. I will scale into this. When you're looking at which ETF to trade, one of the things I like to give preference to, again, are those that are taking out new 55-day highs. And here you can see we had kind of a cut pattern, a handle, kind of false breakout. Now it's finally starting to take out new significant highs, and 50 is the resistance level that this is about to hit coming up. And again, this is a live market video. As you can see, I'm recording this here at just about 2 o'clock Eastern on our October 5th trading session. So I'll be looking for long in TNA over, say, 50.7. I give this one preference over, for example, FAS, which is the triple financial long, because FAS, even though it's, you know, very similar pattern, right, on the 2-day chart, it is not also making a 55-day high. So I prefer to, I'll still trade it, but I'll trade the other ones on larger size, right? I'll trade this, still I'm trading this, but on smaller share size because it does not also make a 55-day high as a continuation trigger. So TNA looks good, UWM looks good, the Qs look fine too. Just wait for those new 55-day high breakouts, and that'll do it. So hope everybody's doing good. Another quick reminder is always keep the trends on your radar. I use a tape-based trend. If it's under 0.7, we look for longs. If it's near 1, we stay clear. Over 1.5, it's a short market. And again, that's the ARMS index or the trend. And always keep an eye on those out of the corner of your eye as you're looking for actual trade entries in market. So, great rally session. Be sure to get the StockTradingSuccess.com system if you have not already ordered it with Steve Nissen and myself. A great package, and that'll do it. So you guys take care. Best wishes. Goodbye.